A very warm welcome to the presentation of the results for our top 25 study for the year 2025. My name is Stefan Schneeberger, and together with Jan-Philipp Schneider, we want to walk you through the main results of this study in the next minutes. First of all, what is the top 25 study? The aim of the top 25 study is to provide a current state of the nation for the automobile industry and especially the automotive suppliers. We look on the top 25 listed suppliers worldwide and the top 10 OEMs worldwide, which are also listed to provide a state-of-the-art picture of the current challenges and an outlook for the automobile industry. Let us have a look on the data. What you see here is the development of the revenues and the operative margins for the top 25 suppliers and the top 10 OEMs. Jan-Philipp will walk you through those slides.
So now if you have a look at the supplier side on the left side, what we see here currently on the revenue side is a decrease of the revenues compared to last year, which was already apparent at the end of last year. If we now look at the OEM side, we see here also a decrease in the revenues, although it is a little bit less compared to the suppliers. If we now look on the margin side, that is where we see something very interesting for a very long time that we haven't seen since the post-COVID area. We see here that these top 25 suppliers are now with still stable margins, even slightly increasing compared to the OEM margins that have decreased significantly from 7 percentage points to 4.5% this year. So for the first time, the suppliers are now significantly above the OEMs. If we now have a look at the composition of the top 25 supplier ranking as well as the top 10 OEMs, what we see here, especially on the supplier side, is a strong M&A driven change. So we see from the spin-off of the Continental, we see Aumovio as a company emerging now as part of the top 25, as well as Hankook, also an M&A driven rise to the top 25. On the OEM side, we see now BYD as the first Chinese player entering the top 25. We previously had in 2023 briefly ZAIC as a player in the top 25, but now we expect BYD also in the next couple of years to remain persistently within the top 25. Now, let's have a brief look at the regional split. And what we see here is really the strong increase in the Chinese role of the top 25 suppliers, where we see decreasing role, especially in the Americas, in Asia and Europe. One interesting fact here is, and might even surprising for some, is the increase in Germany, which is, however, only driven by the consolidation of Vitesco as part of Schaeffler, which now pushes that figure slightly higher than before. Now, let's have a further look at the current perspective of some of the suppliers here. What we currently see is that there is rather a mixed perception of the current situation by most of the suppliers. On the other hand, they still have a rather positive outlook of the future. If we now compare that to what we've seen previously, with OEM margins decreasing even below the supplier level, this might be something to worry about, particularly because OEMs at some point will move into a pain sharing mode where they will likely want to put a stronger focus on their margins, which will adversely impact suppliers. Now, back to you.
Thank you. Now we have heard about the situation of the suppliers, how they see their business going forward, and now let's have a look how the market sees the current state and the outlook for the suppliers and for the OEMs. We have here pretty interesting figures because we look only on listed companies. We can have a look on the market capitalization and make a comparison between OEMs and suppliers. And what is interesting here is that the yearly growth of the suppliers compared to the OEMs is way higher. We have a yearly growth rate since 2022 of roughly 17% for the suppliers and roughly only 5% for the OEMs. What does this mean? The market participants are valuing the suppliers way higher than the OEMs. Why could this be the case? Because market participants see the top 25 suppliers in a better shape to handle the challenges of the transformations going forward and have maybe also less of a cluster risk as the top 10 OEMs are maybe having. This is one fact. And the other fact which I want to highlight here is the development of the region China. We already heard it before that China is more and more getting their place in the top 25 and top 10. And what we see here also in terms of market capitalization, China is already catching up on a significant pace here on the supplier side and also on the OEM side. On the OEM side, for instance, we have BYD, so the so-called Chinese stock exchange champion, which is now a big part also already of this ranking. This is one development when we look on market perception. The other one is looking on the valuation, which is best measured by the price earnings. And what we can see here is, first of all, I think we all know that automotive is less valued by the market participants than the overall average market, which we see here in the comparison to a broad index if we compare it to suppliers and OEMs. But on the other hand, what is pretty interesting here is that the valuation of suppliers has been higher in the recent years than the OEMs. Again, the market sees suppliers in a better shape here to master the transformation going forward, just from a pure market perspective. And the second fact, which we want to highlight here, is if you have a look on the recent data for 2025, you see that OEMs are catching up. But on the other hand, the market capitalization, which we have seen before, is not increasing again for the OEM side, which means basically that the market is expecting the OEM profits to remain on a lower level in the midterm. Why is this important also for suppliers? You already heard it, that OEM margins are under pressure. And if this market perception unfolds true, and in the midterm we will continuously see lower OEM profits and lower margins, this will again also increase the challenges for the supplier, not on the short term for 2026, but also for 2027 onwards, and therefore putting another pressure on suppliers, and especially on those which are currently already in trouble and have, for instance, problems in getting refinancing and so on. This was a quick walkthrough through the results of our study. Hopefully it was valuable for you. And happy to engage in any discussions on this further. And thank you very much for your attention.